Good morning, everyone. This is Brad Matheny. Today's the 26th of March on Thursday. This is a quick little update. We're looking at the SPY daily chart. I know I haven't been posting too much lately on TradingView, but that's because I've been very busy working on things. And so I'll give you a quick little update right now. So we have rolled through a very clean pullback related to the Iran conflict, and we are now moving into what I believe will be a secondary excess phase peak, pushing to potentially new highs. My predictive modeling system is suggesting we're going to move up into the 701, 704, 705 area, maybe a little higher. And you can see historically when we come back over here and look at some of the peaks that set up, you can see how, we roll into a peak, we pull back, we set up a new high, and then we collapse. We roll into a peak over here, we pull back, set up a new high, and then start to collapse. And I believe that we're likely moving through a similar type of a pattern, just like we saw over here. We roll up into a high, we move down, we peak, set up a new high, and then collapse. I believe we're going to be doing the same thing over here. Now, you could argue, but Brad, we've already done the peak, pullback, roll to a new high, and collapse. Yes, we could argue that. But right now, we're holding up in the support channel, which is the defense level right here. I've tried to teach you guys about these defense levels a while ago. These are Fibonacci defense levels. I find them to be extremely useful because I can identify where price is likely to try to target based on these rolling ranges. So right now we have a defense level right in this area, right here, which is our first line of defense. You can see how it acted here, here, and here based on the high price that we have setting up right over here, which if I make sure that we're legitimately at the high, that moves our defense level down here and moves our lower defense level down just a bit. That's still holding up okay. So at this point, ladies and gentlemen, what I believe is the most likely outcome is what my predictive modeling is suggesting is a rally. A rally potentially off of this defense level. You can see this lower defense level that I've drawn right here. We're just below this lower defense level. We have the upper defense level right here. These will become our targets moving forward. And I believe that in all reality, we are setting up a washout low back down here off of this double bottom. We are likely going to move into a rally phase that I believe will transition through Q1 2026 up into this rally, which will carry forward as, again, the concern for the Iran conflict really does not detract from the capability of the U.S. economy. And because of that, I believe that we are going to be basing and bottoming in this area. We are going to be moving into an upward channel that would likely be something like this, rallying up into this middle area, stalling, and then rallying higher, stalling, blowing through a high, and then rolling over, something like that, the dark green level, over the next 2 or 3 weeks. I think basically as soon as we get through this week, we could be looking at a pretty strong rally phase next week, as long as, again, we continue to stay above this defense level. So breaking down below this lower defense level is 642 roughly. Put this down here, 642 to 644. And again, as long as we stay above that level, then I strongly believe that we are going to see a good rally out of this. Now, why? Why do I suspect that? Let me come over here. And these are the SPY cycle patterns for today. We have a carryover pattern today, moving into a temporary bottom pattern tomorrow on Friday. We have a gap reversal and counter trend on Saturday, which means that we could see some kind of news potentially on Saturday. We have a gap breakaway in trend mode on Sunday. We have a breakaway pattern in trend mode on Monday, carryover in carryover mode on Tuesday, inside breakaway in trend mode, pop in counter trend mode, could be a very big bar. Then we have a bottom rally start, which could, again, because it's in counter trend mode, be a top pullback setting up on Friday, moving into a resistance channel. This is very early earnings season. Then into top resistance, gap potential on, again, a Sunday, top resistance, likely moving higher, consolidation and counter trend will still be consolidation, inside breakaway, Harami line, inside breakaway, momentum rally in trend mode, gap up lower, which would be, because it's in counter trend mode, a gap down upper, meaning it gaps down and rallies, a top mode, then a flat down. So I am seeing this basically attempt to move up into, as I showed you, this rally over the next couple of days. I believe that is the move setting up, and that we are currently at a washout low. Now, that move putting us back up above 670 would indicate that we would have a potential A move, and maybe not quite as big as I drew here. So let's try this again. An A move, a BC, and then a D. So in reality, this pattern would come to here, and this pattern would come to here, and we would be looking at this type of a move off the low, setting up an A move representing about a 50% pullback up into the 671, 672 area, slight pullback, rallying up into the 691, 692, 693 area, slight pullback right around this defense level, and then a rally further up into the new all-time high. Now, what that will do is set up a very broad excess phase peak pattern. We've had a number of excess phase peak patterns here. We continue to find fairly strong support down here near this level. So because we continue to find strong support inside this yellow defense level, I believe as long as we hold above the lows of this defense level, we will attempt through Q1 earnings to rally. Now, why am I telling you this? Well, I want you to be aware that I don't believe the Iran conflict has disrupted earnings enough to substantially deteriorate the capability of revenue and earnings playing out over the next 30 days. I believe this has been a disruption in price because of the Iran conflict, but I believe that we're moving into a very strong rally phase that will likely see us push up into new all-time highs. But once we get up to these new all-time highs, now we're looking at an excess phase peak pattern coming up, likely trying to reject up in these areas and move back down into the consolidation phase. Now, where do we get the consolidation range? How do we get the consolidation range? You're asking me, what does this excess phase peak pattern really mean? Let me make this a little stronger. So I will make it light blue. What does this excess phase peak pattern really mean? Well, what it means, guys, is that we have a established range between here and roughly this low. So I'm going to keep it right here where the average low is. And that means that the next pullback is going to come down into this area. I drew it almost perfectly. And this would be our consolidation low. And then this would be, try again. This would be our breakdown into the ultimate low. So here you can see how I've drawn the chart all the way out here into November, targeting the 566 area, maybe down into the 530 area. But in theory, if my expectations play out, we're going to see 700 plus in mid late April, early May. We're going to roll into rejection here. We're going to come aggressively moving downward, maybe stall around this 650, 640 area again, and then break down here into consolidation. The way this would look is we would get a breakdown into a bit of a stall, into the consolidation pattern, and then into the ultimate low here, which I've kind of tried to draw here with this blue mode, showing how the breakdown would take place. My expectations are that we are going to see the April-May peak near the end of earnings. This will set up a wave 5. This is a completion of a wave 5 move higher. So we can call this an E peak, or let's call it wave 5 peak. This is 5A, meaning this is the first wave up. Now, this pullback that I'm talking about, this pullback down here into this low, understand that this is a primary pullback of a wave 5 move. So if I come over here to weekly, if my analysis is correct, we ended wave 4 here. We've got an A, B, C, D, E move up here, setting up the excess phase peak pattern. We would likely move down here into this lower range. Remember, this lower defense level. Okay, and this defense level up here, as I get to it, become very important. So as we realize we're playing through this wave 4, wave 5 move, this is the end of wave 5. This is essentially the top of the first wave of this move. We come down here to 4. This is going to be 5A. Then we're going to come down here to 5B, which will be somewhere in this range on a moderate pullback. That would be your buy zone. Then we are going to rally, and I believe we are going to rally very aggressively up to this 5C area here. So we're going to be looking at a move after this pullback that's going to be bigger, and it must be bigger than this move. So understand that if this move here persists up to 704, 705, then we must have this next move be larger. And that's what I believe we're going to be looking at, about a 1.618 rally up into this October 2028 to April 2029. Now, why is this so important for you to understand? Because traders right now are getting very aggressively bearish. And yes, news could drive the market downward. I believe that after earnings in late May, mid-late May, we're going to be looking at a pretty weak market that is moving into a downtrend, pulling back down to this channel. And you can actually see, essentially, from these levels, you can actually see this level play out across this entire channel. Okay. So for example, as we move down to this channel, you can look at this standard deviation channel. You can see how it plays out. The standard deviation channel plays right here. There's the middle standard deviation channel right at that 552 area. So there you go. That's the zone that we're looking at. Now, if we really wanted to play, we could theoretically come across various highs and or lows to try to establish this level. So hypothetically, I would assume that moving across here to across here puts us right near that level as well. So here is the pre-peak over here in 2007 across the mild peak here. I could trend it up a little. And then we have the deep pullback here on tariffs coming right across there, puts us right at this area as well. 560, 552, right in that area. So at this point, ladies and gentlemen, we are very likely, in my opinion, to rebound off of this low up into a rally phase, pushing from these lows all the way up into the 704, 705 area, completing this excess phase peak pattern, rolling then into a mid-late May topping pattern, down into consolidation around 605, and then down, potentially reaching the ultimate low down here around 665 to 650 area. You can see it right here, 618 pullback. Now, logically, this makes a lot of sense to me. And why does it make a lot of sense? Because we have completed, again, the 5 waves. I've highlighted them here. Okay, we take a look here. There's wave 3, there's wave 4, coming up to 5A. We have the minor move here, A. We have the minor pullback here, B. We have the rally phase, C. We have the pullback, D. And now we're running up here to this E mode up here, the peak. And I believe that we are going to see a Q1 earnings bump to the upside, lasting about 30, 40 days into mid-May, then rolling into a downward cycle trend, which will prompt this pullback. It could be related to news. It could be related to just general market consensus. But at this point, based on my analysis and based on my predictive modeling, the rally phase seems more likely than a continued breakdown. Now, granted, news could change that. If we all of a sudden went boots on the ground in Iran, we could see the markets pull back a bit steeper. Okay, and that would probably put us down into this area, 600. But at this point, it makes sense to me, like I said, that the rally phase is setting up, moving up to the 704 area, because if I can show you the predictive modeling, SPY Weekly is showing a move rally off of this is about a week ago, early March, second week in March. This is weekly. We're rallying up into the 700 plus area into late April and then rolling into weakness. This is my predictive modeling. So again, we are currently breaking below 651. We're at 648 right now. And I want you to realize that we're looking at a potential breakdown here, and we're seeing how this is going to roll down. But currently, we're at the low here. Let me try to edit this while I get rid of that. So we are at the low of this range, right in this area. And I believe that we are going to be moving aggressively up into this 700, 690 area over the next 3, 4, 5 weeks. So this is what is guiding me, the predictive modeling. Now, the predictive modeling can be wrong. We can have an event that changes it, that alters the direction of the trend. But generally, this is what price wants to do, and I believe this correlates very well with Q1 earnings bounce and bottom off of these lows, rallying up into a high back over here into late April, early May, and then rolling into weakness and a downtrend into August, September, October, November of this year. So this is a little hint as to what's going on, what I believe is the most likely outcome. It makes sense to me that this would be the case. Structurally, it makes sense based on price action. We're likely going to, in my opinion, we're likely going to see 700, 704 as a peak, maybe a little higher, rolling into middle April, middle May. And then we're going to roll over into a topping pattern probably mid late May and start to move downward. So, again, be aware of the fact that, I know that a lot of you are reading the markets thinking that we're in a tanking mode, and technically you would be correct based on Fibonacci price theory. We are in a downtrend. We have breakdown patterns. We're running into this support channel, and you can see very clearly that we have these deep support channels here in blue. That's another defense level at the 618 area. We have the defense level here in yellow. And then, and logically, guys, we have these littler defense levels right over here in green. If I can get to them, there we go. Or blue, there's one and there's one. Those are the intermediate defense levels. So I am expecting the markets to move from this aggressive deep low into a new rally phase. And I think you're going to be surprised to see what happens over the next couple of weeks as we move into earnings. I believe that you're going to see a rally take place. I think you're going to see the markets move higher. And given the fact that the markets are in a fairly strong downtrend right now, I thought I would give you guys a heads up that we are very likely going to move into this cycle trend, completing a top right over here, April, May. Okay. All right, guys, that's my update. Remember, um, you need to pay attention to what price is actually telling us and why price is so important. Now, my predictive modeling system is not public. I'm sharing things with you because I want you to be aware that the predictive modeling is aggressively telling us that we should be basing and bottoming in this area and moving back up into late April, May, up into this 695 to 710 area. Okay. All right. Now it's Thursday. Be prepared. Go small. This is a very aggressive market that can be driven by news. I want you to be aware of it. And like I said, if you want to be cautious, just wait for this base and bottom to actually start to set up and then start preparing your long trades. I think this is a pretty solid move setting up. And I think it's just going to be a matter of time before traders realize that we're going to go through a pretty strong earnings season. And I think it's going to drive valuations higher. Okay, guys, talk to you later.